Welcome everyone to our weekly Forex market analysis call. This is in preparation for the week of September 3rd to 8th, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. And if you have any questions specific to your own investment needs, I recommend you talk to your investment advisor. All right, so first off, we'll start off with our Forex Factory. So important things that are going on in the market right now, even aside from the news that's coming out this week, very important here, we see that North Korea is conducting more nuclear tests. And as a result of that, so we saw we have been seeing these nuclear tests being conducted for the last few weeks. And so far, excuse me, they've tried to, U.S. has basically, they're having talks with negotiations with different leaders and so forth around this, but sounds like the tests are getting a little bit more aggressive now, and the situation may be escalating a bit. So how does that impact us from trading perspective? So the most important thing here is last week, I think it was, or the previous week, where we saw the tests being conducted and the response from President Trump wasn't, in market's view, wasn't quite strong enough. So we saw Japanese yen drop, which means all the Japanese yen crosses actually went up as a result of that. So once we see the new stuff that we are seeing here is that President Trump is condemning these tests a little bit more strongly now. And as we see the situation escalate, the important thing we'll have to keep in mind is that when things are, when there's risk in the market, Japanese yen will go up, which means Japanese yen crosses will usually drop. And so safe haven currencies, Swiss franc and Japanese yen, are two safe haven currencies, and they tend to do well when there is risk in the market, and especially now when there is when there are concerns around weapons testing. And this time they tested a hydrogen bomb, and they said, and it actually caused earthquake. So all of these, it's things could escalate from here. Basically, just a warning there. Just keep an eye on those things, especially if you're trading Japanese yen or Swiss franc, because we could see impact there. Okay, so that was just what's going on in the market currently. Another thing with euro, we saw, or last week, I think it was on Friday, ECB, excuse me, one of the ECB officials said that they're not quite ready for their winding down their asset purchase programs. That was one of the things that was driving the euro up, because market was expecting ECB to come out with this, with the plan around how they're going to cut back on the asset purchase program as early as September. And now that we are in September, they basically came and said that we may not be ready with that till December, and that's why we saw the euro take a hit. So if we hear comments around the same theme, that will be negative for the euro, because what's been driving euro up so far has been the expectation, the market sentiment, that they're going to start cutting back on the monetary policy. So those are the two main things that are going on in the market, aside from the news that we need to pay attention to. In terms of the news here on Monday, we have PMI numbers out of UK, but it is a holiday in US and Canada. As a result, New York session is likely to be pretty dead there, unless there is the whole nuclear weapons things escalates. Then we may see the Japanese yen and Swiss franc pairs, they can move quite a bit. So that will be the caveat there. And then on Tuesday, we have more, Tuesday, important thing here, we have cash statement and RBA rate statement from Australia. Again, this will be very important. So last time they said RBA, said that
the bank was concerned about the high exchange rate, and as a result of that, they were not going to raise rates. So now Canada has raised rates, US has raised rates, and usually it's the commodity currencies that tend to follow the rate hike cycle. So let's see if Australia changes the direction. So they may not raise rates here. We are not expecting them to raise rates, but the commentary that comes out of the bank will be very, very important. So something to pay attention to. So essentially, what are we looking for? If they say that Australian dollar is still high and we are concerned about China growth, or we are concerned about just economy in general and being able to hold the rate of growth, that would not be good for Australian dollar. However, if they say, okay, inflation is going up, we see that economy is doing well, so right now we're not ready to raise rates, but at some point we will start thinking about that. That will be positive for Australian dollar. So that's kind of that's what we're looking for. And then going further down, we have lots of PMI numbers. PMI numbers are actually positive. PMI numbers are precursors. They're leading indicators, so they are important. So especially services PMI number here for British pound is very important because it is a services-based economy. And then we have RBA Governor Lau speaking. So this is a follow-up on the rate statement from earlier. So again, if you're trading Australian dollars, I will be very careful with that on Tuesday. And then GDP for Australia, so a lot of that. And now that we are into our September, we are starting to see a lot more FOMC members speaking here. So those are very important as well, because now we have seen 2 rate hikes, and market is, I think, not expecting a rate hike for September. And essentially, we're looking for a rate hike somewhere in December. However, due to Hurricane Harvey and other things that are going on with North Korea and stuff, we may not see that rate hike till later. So it will be very important to pay attention to the comments that are coming out of FOMC members, because before they started doing the rate hikes, they warned the market that they were going to do rate hikes. Pretty much everybody came and talked about it. So that's the same thing we need to pay attention to for this time as well. So if we hear comments like, we have to wait and see, we need to watch the data that's coming out, or we need to wait for the geopolitical risk to pass, any of those statements or a variation of those statements would be negative for the US. However, if they come out and say that, oh, we are still in line with our rate hike expectations, then that could be positive for the US dollar. All right, following that, so it looks like a central bank week. Following that, we do have GDP out of Australia, again, important. Trade balance for Canada on Wednesday, very important here, Bank of Canada rate statement. The interest rate is not expected to rise, but again, we are looking for the same thing out of Bank of Canada as well. They have already done 1 interest rate hike, and now we need to basically pay attention to their commentary and see what their expectations are in terms of the next rate hike. Are they looking at it right now, or are they going to wait on it? Any of that. So anything that is positive that says, okay, we are looking to do further rate hikes in the coming months, all of that will be positive for Canadian dollar, and as a result, Canadian dollar will go up, and so that means dollar CAD will likely drop. So a lot of data out of Australia, so it looks like it may be a volatile week for Australia here. We have retail sales and trade balance, and then ECB. So a lot of central bankers this week expect to see a volatile week. So this is where this is what the markets will be looking for. ECB press conference, they're not expected to raise rates at this time. However, what the market will be looking for is the winding down of the asset purchase program, which is also reduction of monetary policy. And when a country reduces the monetary policy, it's positive for the currency. And that's why, like I mentioned before, euro has been going up. But if we don't hear anything about
So here's the thing. So if they come out and say that we're not quite ready with it yet, and we are likely to, we'll be working on it, and we'll likely come to it in December, that will be negative for the euro. So anything that suggests that they're not likely to kind of reduce the asset purchase program will be negative for the euro. And then we have unemployment claims, IVPMI, crude oil inventories. Crude oil inventories will be important here just because with Hurricane Harvey, we have seen that the oil supplies inventories were building up because many of the refineries got hit and shut down. As a result of that, we saw gas go up in price because oil wasn't getting refined and turned into gas. As a result, gas went up, but oil dropped because of buildup in oil inventories. So if we see a buildup in oil inventories, that will be negative for oil, and as a result for Canadian dollar as well. So that's something we need to pay attention to. But between oil inventories and Bank of Canada will be more important. And then we have trade balance numbers, and Australia, we have RBA Governor Lau speaking once again, manufacturing production numbers for the British pound, and employment numbers for Canada. And again, more FOMC members speaking. So this week is full of central bankers. Lately, central bankers have been driving the market with interest rate hikes and their commentary. So very, very important week going forward. All right, let's move on to our charts here. So let's start with euro. So euro has had an interesting week. We saw that it went all the way up to 120.70 level, which is coming all the way from here. So this is a previous support and resistance level. We haven't been at this level. It fell through, price fell through this level here in 2015. And since then, this is when Fed had started raising rates. Now we see, sorry, no, even prior to that, sorry. So this fell through here. I think this is when they were having problems there. So it has fallen through there. This is the previous support and resistance. If you go to the monthly chart, as we can see, this is where price is reacting at the moment. And this week now, we closed down with euro. And the big reason they closed down was because of that statement that came and said that we are essentially not going to have that asset purchase program wind down ready just yet. Based on this, though, this looks negative. However, just keep in mind with all the central banks coming and speaking and making statements this week, there could be volatility and things can change because that's what their comments will drive the market. But for now, just based on technicals here, this is bearish. We are looking for price to move down further and looking for it to move down into this 1.1670 area right into the bottom here. Pound dollar, looking at the weekly chart here, we have a small move to the upside. With the UK now, we are starting to see, or we will start seeing more of the Brexit chatter coming to the front. So that will be important to keep it'll be important to keep an eye on that. So right now we have bullish candle, not a very big candle, but nonetheless it's bullish. So in that case, we can look for a further move to the upside. So the first target here will be very close here, 130.60 will be the target to the upside, but the move is not very strong, which means it can turn at any time. So the target here will be 130.60, and we are looking for a bullish move to the upside. All right, Aussie dollar. Aussie dollar is also bullish. So as a result, we are looking for a follow through to the upside. We have Bank of Australia, RBA, coming, and we have a rate statement from that. As a result of that, of course, things will move. So for now, based on the bullish close for the week here, we are looking for price to move up into 80 level, which is the next support and resistance level there. And if the statement is positive, we could see price go higher into 81.60 level, which is this previous support and resistance. We haven't been here in quite some time. So do expect, once we start getting into these levels, do expect price to have a reaction. But for now, we are bullish and looking for further move to the upside. New Zealand dollar has not been as strong as Australian dollar. So this one, our candle close here is bearish. So we're looking for a further move to the downside, 70.50 level. So with any of these moves, we are always looking for pullbacks before we see the trend continue. So just keep that in mind. What that means really is that price could, before, let's say, it comes down, it could just pull back up and then drop like that. Same with all the other currencies that we just talked about. But New Zealand dollar right now is bearish, and we can expect further move to the downside. Dollar CAD here, it is also bearish. Price dropped, and now we're looking for a further move to the downside, looking for a 122.20 area here to the downside here. And this again will be impacted by what Bank of Canada has to say. So the next target beyond that is 120.80, and with this one, what we have to keep in mind is if the rate statement is very positive, then we are looking for price to move lower. However, if it's not positive, we could see price turn around. So keep that in mind. Overall, we are bearish on dollar CAD with target of 122.20 level. Euro Swiss here, this is likely to get impacted because of North Korea situation. So I would be very careful with this one because things can change. So right now it is looking bullish. It's held this previous support and resistance level. It is looking bullish, so we could get a move towards 1.1520, the top of the range here. However, if when the market opens, if there is risk in the market and there is likely to be because of North Korea situation, this one could drop. So all the Swiss franc crosses could drop because Swiss franc could become can become more expensive. So let's take a look. Sorry, New Zealand US dollar target was 70.50, 0.7050. Okay, Euro Swiss franc. So from technical perspective, we are looking at price to go up into 1.1440 level, but this could turn around and come down. So I'm looking at this as a range-bound market right now for the last few weeks, quite a few weeks actually. We have traded in a range, so based on that, we're looking for price to go up. But this one, I'm going to wait and see how the market opens. So if the market perceives a threat, then we are likely to see a drop from right about here, and price may not even go past this level, 1.1480. So I would be looking for a reaction here. If it does go beyond that, then I'm looking for price to go all the way to the top of the range. But if the risk comes into the market, we are looking for price to come back down. And in that case, we are looking for this target level here, which is 1.1320 level. So we'd be looking for price to drop in that case. Pound Swiss here, we saw a bullish close for the week. However, the threat is not gone, so the threat is back in the market, and we are into resistance here as well. So this one, overall, from technical perspective, we are very bullish. However, the risk in the market, like I said, with all Swiss pairs, could change that. If the technicals stand, then we are looking for a further move to the upside, 1.2650. But if the risk comes back into the market, we are looking for price to go back down into this 122.50 area, bottom of this here. So I'm going to treat this as a range-bound market as well. If the price does not break this level, 1.2500 level, if it stays below this level, we are likely to see a drop back towards 122.50 area towards the bottom here. So the market open today will be interesting because we're doing our analysis prior to market open, and there's news that's been flying around while the market has been closed. So we may see market gaps when things open again. Okay, so with this one, again, a bullish close here. However, because this is another Swiss cross here, we are looking for this 9700 level as a level where price may reject and come back down. If the risk stays in the market. Otherwise, this is very bullish close, and the target would be 97.70. So with all of these, we just have to keep in mind to see what the market does and react accordingly. Again, very bullish close, just purely based on purely technicals here. And as a result of that, we would be looking for 144.70 level. But like I said, if market doesn't, if market has risk, sees risk, then we're likely to see this one drop as well. But overall, though, all Swiss crosses are looking bullish. But keep in mind, so we'll set targets on both sides. So the next target to the upside here would be 144.70 level. But if it turns around here, then 139.80 would be the target. So I'm going to mark both of those targets and keep them on. Okay, so euro yen. Euro yen, because of the euro here, we have had a very neutral close for the week here. And in terms of our targets, we can, looks like price is rejecting the high. So we could see a test of this level, and then we have to see which way things fall. So if as a result of the risk in the market, prices move, this is likely to drop, just like all yen crosses, because yen will get stronger. So in that case, our target would be 129.60, and the second target would be 127.60. And these things can move quite a bit when there is risk in the market, so do keep that in mind. And ECB is another variable here that will come into play. So if ECB is positive, then we could see this go to the next level, to the upside here, because Japan, in terms of monetary policy, is not very strong right now. They don't want to raise rates. They don't want to cut back anything. That's just how it is. That's just how Japan always is. So if ECB is positive, we are likely to see a break of this 131.50 level. And in that case, we'd be looking for next target to the upside, which will be 133.20. But 131.50 level is very, very important. So we're looking for, with risk in the market, we're likely looking for a drop of this and looking for further move to the downside. But if the market just ignores the risk and say, oh, we are used to it now, then all of these can go up. So in this case, if it's still neutral, and we would have to look for 131.50 to break. If it breaks to the upside, then 133.20 will be the next target. Otherwise, this could just come down. Yeah, it's the same analysis that I, at the beginning of the week, I look at the weekly charts, how the weeklies close, and from there on, every day I go on to the dailies and look at where the targets would need to be in terms of the daily chart. Okay, so this one is very bullish. For the last few weeks, we haven't been able to break this 85.60 level, and the close is very bullish right now. So we are into resistance here, 87.90, so about 88.00 level. The next target would be 89.40 level, this previous high here. But same thing, and keep same thing in mind, this could turn right here. But if it doesn't, if it breaks above here, we are looking for 89.40 as the target to the upside. Dollar yen. Dollar yen is also bullish. We see a nice bullish candle close, but again, we are into resistance. So price could just turn back around and we could start seeing the price go back towards 108.30 level here. But based on the weekly close, we are bullish, and as such, our next target will be 112.20 level here. So looking for price to move up higher, but again, into strong resistance. So anytime we have current situation like this, the first thing is we need to basically sit and watch, just see how the market opens, what kind of comments. So I would be looking at Bloomberg and Reuters and keeping an eye on my newsfeed as well to make sure to understand what kind of comments are coming out of the market and adjust the trading accordingly, because things could change here. All right, so that's all I have. Any questions before we call it a wrap? All right, so I don't see any questions. So you guys have a wonderful weekend, and those of you in our North America or Canada, US, have a great long weekend. Non-farm payroll, what about it? There were a bunch of things going on with the non-farm payroll. The non-farm payroll did not come in as very strong, but the reaction to it, I think, was mired by other comments, other things that was going on in the market. So I think we saw price go up because non-farm payroll wasn't actually that strong. But with the ECB, we had comments from ECB in terms of them not coming up, pushing back the date for when the asset purchase program will be released. As a result, euro was very bearish, and I think just the selling in euro kind of took other things down, took the pound down with this as well, because look at this drop. Price dropped quite a bit with the euro pound. So just the selling in euro, I think, just put a damper on things. Yeah, it wasn't much of an event. Non-farm payroll wasn't strong. It came in negative, but it didn't do much. All right, so that's it. So we'll call it a wrap. I will see you guys next time.